Hi, welcome to Rec TV Education. Today we are going to see one of the topic in costing, that is material. Before discussing this topic, let's say a simple thing. First, the cost consists of three elements, that is material, labor and overhead. Here, material constitutes major portion of cost. Now, let's look into this material topic. Material means all the tangible products used in factory, office and for the purpose of selling and distribution of goods and services. Material is of two types. One is direct material and another one is indirect material. Here, direct material means which is identified in the final product. For example, if we see making of plastic chair, the plastic used in making the chair is an direct material that we can easily identify in the final product. Next one, indirect material. Indirect material is consumed in production but cannot be identified. Example, stationery. If we see the example, we use many small bowls like small items in the production but in the final product which cannot be identified. Indirect material also includes packing material. Packing material is of two types. One is primary packing and another one is secondary packing. Primary packing is one without which product cannot be sold. For example, cool drink. The glass bottle used to sold the cool drink is the example of primary packing, and another one is secondary packing. This is the packing used only for safe transportation of a product. For example, if we buy a mobile from the showroom, the box used to safeguard the mobile is the example of safe secondary packing. In a manufacturing industry, in order to purchase material, certain procedure is involved. First of all, a stores department requires some quantity of material which it issues a purchase requisition note to the purchase department to get the material from the market. Then after purchase department, after receiving the note from the stores department, searches suppliers in the market. Based on their past experience and based on their advertisement standards, etc., they choose 2 or 3 suppliers. After choosing is done, the purchase department makes an order. Goods received note. When the order is placed by the purchasing department, supplier sends a material to the factory. When material enters into the factory gate, the inspection department will inspect the material entering into the factory gate. The goods received note, which contains the date, time of delivery, quantity and quality of material, supplier's name, vehicle's number, delivering the material, freight paid, etc. The inspection department will make 5 copies of goods received note. 1 copy is given to the storekeeper, another copy is given to the purchasing department, 1 copy is retained by itself, and 4th copy is given to the account departments if there is any payments, and 1 copy is sent to the suppliers in acknowledgement of receipt of goods into the factory gate. Material requisition note. The stores department will not issue the material unless there is a proper authorization. This material requisition note is issued by the department demanding the material to the stores department. On the basis of this material requisition note only, the stores department issues a material to the respective demanding department. Material transfer note. This note is prepared indicating when excess material from one job is transferred to another job. Material return note. Instead of transferring excess material from one job to another job, if the excess material is returned to stores department, the demanding department will prepare this material return note. Bill of material. Bill of material contains complete information regarding materials required for completion of job or process. It is prepared by the engineering department. Advantages of preparing this bill of material is it is used to prepare budgets, and with the help of this bill of material, budgets and actuals can easily be compared, so accordingly material variances are calculated. Duplication of work is avoided as there is no need to prepare material requisition note again and again for each and every item because it contains the complete information regarding the job. And bill of material is used to control the usage of material by the production department, as before buying the material we already know how much quantity of material is required to complete the job. I can understand. With different types of notes, something is going in your mind. Let's break this confusion with this simple example. First, stores department people issues a purchase requisition note to the purchase department for the requirement of material. After purchase department, on receipt of purchase requisition from the stores department, makes an order to the supplier. Supplier, after receiving an order from the purchase department, supply goods. When goods enter into the buyer's factory gate, the person sitting near the factory gate will inspect the goods entered into the factory gate by addressing all this in the goods receiver note, and the inspection department will make 4 copies of goods receiver note and is given one to the stores department, another one to production department, and another one to the supplier, and another one is retained by itself. Next, engineering and planning department will prepare bill of material which contains a complete information regarding the material required for the completion of job or process, and it is issued to the stores department. The stores department cannot issue materials to any departments without any proper authorization. In order to issue a material, the production department issues a material requisition note to the stores department, then after which on the basis of this material requisition note, stores department issues a materials required for the production department. When stores department issue materials to the production department, when there is any excess of material in the production department, we can send this excess of material to another production department by material transfer note. Instead of sending this excess of material to the production department, if we send to the stores department by a material return note. The previously discussed notes can easily understood with the help of this following diagram. Bin card. It is maintained in stores department. It records the quantitative details of material, receipts, issues and closing balances. With the help of bin card, it is very easy to find out the physical stock in hand. Stores ledger. Stores ledger records both the quantity and value of material, receipts, issues and closing balances. Now we need to know at what rate the material should be entered into the stores ledger. For that, let's see this simple formula. Stores ledger price is equals to cost of purchase divided by net quantity. To understand this, let's say a small example. First, here in the problem it is given that a raw material 10,000 units at the rate of 10, sales tax 10% on the raw material, railway freight 2000, normal loss 500. Here trade discount is also given by the supplier, that is 100. Let's solve this formula into 3 steps. Step 1, first let us find out what is the cost of purchase. Expenditure incurred till the material enters into the factory gate is to be added, and the benefits, if any, received is to be deducted from the purchases. Now the cost of purchase here is raw material plus sales tax plus railway freight. It is the expenditure, so it is added, and the trade discount, as it is a benefit to us, so it is deducted. Raw material 1 lakh, sales tax on 10% on raw material, that is 1 lakh into 10%, 10,000, railway freight 2000, that is given in the question, trade discount 100. Now here by solving this we will get cost of purchase is equals to 1,19,900. This is step 1, and when we go to step 2, now we have to calculate what is the net quantity. Here net quantity is equals to gross quantity minus normal loss. Here in the question it is given that raw material is equals to 10,000 units. It is a gross quantity. So gross quantity 10,000 minus normal loss, that is 500. We get net quantity 9,500. Now step 3 is very easy. Divide step 1 and step 2. Cost of purchase by net quantity. Here cost of purchase already we have calculated in step 1, 1,19,900, and net quantity we calculated in step 2, that is 9,500. So that is 12.6. At this rate, the material whatever we are receiving and whatever we are issuing to the demanding department, it is to be entered into the stores ledger. Treatment of shortages in stock taking. When we go for physical verification, there will be a difference in the physical stock and book stock, due to the normal reasons and due to the abnormal reasons. If it is the difference is due to the normal reasons, it should be treated as a production overhead, or it can be treated by inflating material price. If it is due to the abnormal reasons, it is charged to the costing, profit and loss account. Accounting and control of waste, scrap, spoilage and defectives. Before going this accounting and control, let us understand very simple terms what is waste and what is scrap, spoilage and defective. It is a loss of raw material in processing and having no recoverable value, that is it cannot be sold. Scrap, incident residue from manufacture having very small value and can be sold without any further processing. Spoilage, materials which are badly damaged in manufacture are sold without any further processing. Defectives, material used in a manufacture is not as per the specifications. Now let us see accounting treatment of waste, spoilage, scrap and defectives. First, when we see wastage, if the wastage is due to the abnormal reasons, it is absorbed in cost of net quantity. If the waste is due to the abnormal reasons, it is charged to the costing, profit and loss account. Now the accounting treatment of spoilage. If the spoilage is due to the normal reasons, there is two treatments. One is it can be charged to the production overhead, otherwise it can charge it to the production order, that is it can be charged by the good units. If the spoilage is due to the abnormal reasons, it can be charged to the costing, profit and loss account. Now let us see accounting treatment of scrap. The scrap, if it is very small, that is if it is negligible, it may be excluded from the cost. Otherwise, the cost of the scrap can be included in the overheads, and the income whatever we are getting from the scrap, it can be treated as other income in the general profit and loss account. If the scrap not identifiable to a particular job, then NRV, net realizable value of scrap, is deducted from the overhead. So overhead rate is reduced. If the scrap is identifiable to a particular job, then whatever the cost is incurring due to this scrap, it is charged to that particular job or process. Now let's see a last accounting treatment and defectives. Defectives can be treated in any of the following three ways. First, it can be charged by good units produced. If the defective is due to any department which cannot be identified, it can be charged to the general overhead. If the defectives are due to the fault of a particular department, if it is identified, then whatever the cost is incurred due to this defective, it is charged to the department overhead.